Good evening, and I'm Salma El Feki, and welcome to Qnews Economic Bulletin. We bring you the latest top economic stories along with expert analysis on the events and trends shaping the regional and global economy. Throughout our coverage, we spotlight key sectors and highlight the defining economic developments of the moment. To start with the latest headlines, we'll hand over to our colleague Mona Msilhi for the top economic stories. What do you have for us, Mona, today?
Well, thank you so much, Selma, and definitely we have plenty of news from around the whole world. And we start off with global news as the UN Trade and Development UNCTAD has revealed that global foreign direct investments, the FDI, increased 6% to $1.6 trillion in 2025, ending 2 consecutive years of decline. In its World Investment Report 2026, it stated that the recovery was uneven, with FDI inflows to developed economies rising 11%, while developing economies recorded just 2% growth to $901 billion. UNCTAD said more than 80% of global FDI was concentrated in the world's top 20 host economies, highlighting an increasingly selective investment landscape. The agency warned that uncertainty over trade policy, geopolitical tensions, conflicts, and high financing costs could continue to weigh on global investments in 2026. In Europe, the latest Lloyd's House Price Index has revealed that UK house prices rose 0.2% in June, marking the first monthly increase since February. The average property price reached 299,330 sterlings, while annual growth edged up to 0.6% from 0.5%. Lloyd's said easing mortgage rates provided some support, though affordability pressures and economic uncertainty continue to weigh on buyers. Northern Ireland recorded the strongest annual growth at 7.4%, while London and the southeast saw prices decline over the year. And moving on to Asia, the World Bank has expected China's economy to slow from 4.9% growth in 2025 to 4.4% in 2026 and 4.2% in 2027. As weak domestic demand, high debt, and property sector challenges weigh on growth. The bank cited weaker domestic demand, high debt levels, and ongoing challenges in the property sector. The lender said China will need reforms to boost household consumption and support long-term growth as the economy continues its transition away from investment and export-led expansion. Official data has revealed that China's central bank increased its gold reserves for the 20th consecutive month in June, marking its largest monthly purchase in more than 2 years. The People's Bank of China added about 480,000 fine troy ounces, or nearly 15 metric tons, bringing total holdings to 75.44 million ounces by the end of June. Despite the increase in holdings, the value of China's gold reserves fell to $303.72 billion from $340.75 billion in May, as gold prices dropped sharply during the month. Japan's government is working to ease concerns over its fiscal direction after investors questioned whether its latest economic plan could lead to higher spending. Officials reaffirmed their commitment to fiscal discipline, saying responsible public finances remain a priority as markets monitor the impact of government policies on the Bank of Japan's interest rates decisions. In the tech world, Meta Platforms said 4 U.S. states are seeking nearly $1.4 trillion in penalties in a lawsuit accusing Facebook and Instagram of encouraging addictive use among young users and misleading the public about platform safety. The case, brought by California, Colorado, Kentucky, and New Jersey, is set for trial in August. Meta rejected the proposed damages, calling the figure unsupported and unprecedented. The company faces similar lawsuits from dozens of states over allegations that its platform harmed young users. Meta has denied wrongdoing and argued that claims of social media addiction are not legally established. The International Energy Agency has reported that global natural gas demand is expected to decline 0.5% in 2026, marking the third annual drop in 7 years. The decline is being driven by weaker gas consumption in power and industrial sectors, while disruptions to LNG shipments through the Strait of Hormuz have tightened supply and kept prices elevated. Although lower LNG output from Qatar and the United Arab Emirates has been partly offset by increased production from North America, Africa, and Australia, the IEA warned that prolonged disruptions could keep global gas markets tighter through 2027. In commodities, oil prices rose more than 2% on Tuesday after reports of attacks on vessels near the Strait of Hormuz revived fears of disruptions to shipping through the critical energy transit route. Brent crude futures gained 2.58% to $73.85 a barrel, while U.S. West Texas Intermediate crude rose 2.52% to $70.28 a barrel. And before we continue on with our economic bulletin, let me here just announce that Egypt has just made its second goal. Mustafa Zico was the one to hit the goal, and we'll continue on later on with the latest news. Back to our economic bulletin, and gold fell on Tuesday as investors monitored escalating hostilities in the Middle East that sent oil prices higher and braced for minutes from the U.S. Federal Reserve's June meeting for guidance on the monetary policy outlook. Spot gold was down 0.6% at $4,138.39 per ounce, while U.S. gold futures for August delivery fell 0.5% to $4,148.5. Bullion hit a two-week high on Monday as a softer than expected U.S. jobs data last week prompted markets to dial back near-term interest rate hike expectations. Well, it seems like the VAR has another option, and back to our bulletin and global stocks. Stock markets traded lower with major indices in US, Europe and Asia posting declines. In the United States, the S&P 500 fell 0.29%, the Nasdaq Composite dropped 0.7%, and the Dow Jones Industrial Average slipped 0.32%. In Europe, the UK's FTSE 100 edged up 0.13%, while the Germany's DAX declined 1.37%, and the France CAC 40 lost 0.51%. In Asia, Hong Kong's Hang Seng Index fell 0.51%, China's Shanghai Composite dropped 1.26%, and Japan's Nikkei 225 declined 2.12%. Those were the economic top stories for the hour. We now return to Salma Al-Faqih in the studio. Salma.
Thank you very much, Mona. And now we move to our in-depth analysis. Can a $1,000 investment at birth change a child's financial future? That's the question surrounding President Donald Trump's new Trump Accounts program, which provides government-funded investment accounts for eligible newborns while encouraging families, businesses, and philanthropists to contribute over time. Let's take a closer look. U.S. President Donald Trump has officially launched the federal Trump Accounts savings program during an Oval Office ceremony, saying it will help make millions of American children very rich. The program provides a $1,000 government-funded savings deposit for every child born between 2025 and 2028. Children under 18 can also open accounts, but without the federal contribution. Trump said that about 6 million children have already enrolled, including 1.4 million newborns who received the initial deposit. He also rang a ceremonial opening bell for the New York Stock Exchange and the NASDAQ from the Oval Office, calling the first joint opening by the two exchanges.
Like, as I mentioned, Michael and Susan Dell. It's going to teach children to be entrepreneurial.
In addition to the federal funding, the Trump Accounts initiative has secured substantial backing from corporations and private donors. Philanthropists Ray and Barbara Dalio pledged $250 for each of the 300,000 children in Connecticut, while hedge fund manager Brad Gerstner announced a similar commitment in Indiana as part of the federal 50-state challenge. JP Morgan Chase, Charles Schwab, BlackRock, Visa, Intel, and Bank of America have also pledged contributions for employees' children. Michael and Susan Dell committed $6.25 billion to the initiative. For his part, Treasury Secretary Scott Bessent said 86% of Trump accounts belong to families earning less than $200,000 a year, arguing the program primarily benefits middle and lower income households. And for further analysis, we're joined from Washington by Chairman of Links Investment Advisory, Mr. Peter Tanos. Welcome, sir, to Q News. Sir, I'm going to ask you, the Trump Accounts program gives eligible newborns a $1,000 government-funded investment account. From an economic standpoint, how significant could this initiative be in expanding wealth-building opportunities for future generations?
Hi, nice to be with you again, Selma.
Thank you.
It's actually a very good start. The key to this program is the fact that the money can grow tax-free until the child is $18. But more importantly is that parents can contribute up to $5,000 a year to the account. And that's really going to be important because the $1,000 by itself can't grow very much. But if you contribute $5,000 a year, the total amount after 18 years could be very substantial. I can give you examples later if you want.
Okay. Sir, I'm going to ask you, the administration says the funds will be invested in a diversified, low-risk portfolio. Yet some analysts argue the projected returns resemble those of an all-stock portfolio. How realistic are the program's growth projections?
Yeah, that's actually right. In fact, I've written a story about this. They talk about a diversified low-risk portfolio, and in the example they give, it's an entirely a stock portfolio. And by the way, that's exactly what it should be, because stocks are the biggest growth engine in American history. So if you invest in the stock market over a long period of time, history suggests that it will grow, and it will grow historically at about 9% a year over time. So that $1,000 especially if the parents add $5,000 a year,
Mm-hmm.
could be worth well over $200,000 when the child is 18
18
years
years
old.
old. Yeah. Okay, the official example suggests an account could grow to more than $270,000, as we were just mentioning, over 18 years with annual family contributions. Do these projections reflect reasonable market expectations, or do they risk creating unrealistic expectations for families, rather?
Yeah, the $270,000, I don't know where they got that from, because if you do the math and unwind that,
Hmm.
that amounts to a 10.5 or 11% per year increase in the account for 18 years.
Okay.
The answer is that is probably unrealistic. Over time, 8 to 9% for US stocks is realistic. And there are no 15-year periods in American stock history where you lost money in the stock market. So the idea of investing this 100% in stocks is really the right way to go for a long-term investment like 18 years. But calling it a well-diversified investment is not correct.
Okay. Um, how should these accounts be invested to strike the right balance between maximizing long-term returns and managing risk, especially given the 18-year investment horizon?
Yeah, the point is the 18 years. In my opinion,
Hmm.
it should be invested exactly the way they're going to invest it, 100% in the stock market, specifically in a Standard and Poor's 500 index, which means it'll be invested in 500 different companies. So that is the right way, but they've got to get the nomenclature straight and start calling it what it is. 100% equity portfolio, not a diversified one.
Okay. The initiative has also attracted billions of dollars in commitments from corporations and philanthropists, as we've just seen, I mentioned earlier on. How important will private sector participation be in determining whether the program succeeds?
Yeah, it won't, what it'll help is obviously funding this. The estimated total cost of this over the next few years is about $15 billion, which is frankly a rounding error in the US budget. The contributions by people like Michael Dell, which, as you pointed out,
Yes, I
is
did.
over $6 billion, it goes a long way towards helping fund this.
Mhm. And could Trump accounts actually help narrow the wealth and education gap, do you think? Or will families with greater financial resources benefit disproportionately because they can afford to make larger annual contributions?
No, because the limit is $5,000.
Oh,
Most
okay.
middle class families will be able to put $5,000
Yeah.
tax free into this account.
Mhm.
So it really is well designed. They've just got to describe it better.
Okay. What safeguards should be in place to ensure transparency in how these accounts are managed, including the investment strategy, maybe the fees, performance, and communication with families?
Yeah. Well, we can't predict the future. So the best thing we have to judge what performance might be is a long track record. And guess what? The longest track record in American history are US stocks. We have 100 years of data on the US stock market, and that's where the 8 to 9% growth comes from, because that's what it's been over time. But the only way to be ensured that you get that is to invest long terms, and 18 years qualifies as long term.
Yeah. Mr. Tsanas, looking ahead now, what changes or improvements would you recommend or suggest to maximize the program's long-term economic and social impact?
Uh, Had it not been invested 100% in stocks, I would have recommended it be invested in 100% in stocks. The important thing is that it be well diversified stocks like Standard and Poor's 500 index, which is where it is intended to be invested. And nobody else should interfere with that. So I like the way the program is structured now. We just don't want anybody to get any fancy ideas about changing it.
Yeah. The Trump Accounts program gives eligible newborns a $1,000 government-funded investment account. From an economic perspective, how significant could this initiative be in expanding wealth-building opportunities for future generations?
Yeah, as I said, remember, this is primarily to fund education, which in the United States is very, very expensive. And it does that, but it only does that. Remember, it's only $1,000 one time. So the important thing is the tax benefits of parents contributing to this account every year, because the $1,000 will only grow to $3,000 or $4,000 if the parents don't contribute. So the contributions and compounding is what is going to make this valuable if the parents play along.
And, sir, the official examples suggest an account could grow to more than $270,000 over 18 years with annual family contributions. Do these projections reflect reasonable market expectations, or do they risk creating unrealistic expectations for families?
Yeah, the fact is that the $270,000 number is not realistic because, as I mentioned earlier, it implies a return of 10.5 to 11% for 18 years. There are periods in American history where that's happened, but it is not realistic to rely on that. A closer example would be 8 or 9% per year historically. If parents are willing to accept that as a realistic estimate, they're still going to end up with a nest egg. If they put $5,000 a year into this, they'll end up with a nest egg of over $200,000. That's enough to pay for most colleges in the United States. This is why I think the plan is worthwhile.
Yeah. And from Washington, that was the chairman of Links Investment Advisory, Mr. Peter Tanos. Thank you so much, sir, for being here with us and for your insights. And now we turn to the fans' favorite, as all eyes remain on the World Cup 2026. Sports has become one of the world's most powerful economic platforms. Whether it's boosting tourism, strengthening national brands, or driving consumer spending, the impact extends far beyond the pitch. Let's take a closer look. The celebrations may last a few hours, but their economic impact can last much longer. Around the world, countries are using major sporting events to transform their cultural heritage into a powerful branding and tourism tool. And here's the story.
A victory on the football pitch can do more than lift a trophy. It can become an opportunity for countries to tell their story to the world. Norway's Viking-themed celebrations following its World Cup success are the latest reminder that major sporting events have become powerful platforms for nations' branding. Today, countries are increasingly using sport to showcase their history, culture, and identity, not only to celebrate victories, but also to generate economic value. From New Zealand's haka to Japan's samurai heritage and Morocco's Amazigh traditions, cultural symbols have become a part of a country's international image, helping attract tourists, promote exports, and strengthen national brandings. For host nations and participating countries alike, global sporting events offer exposure that traditional marketing campaigns often struggle to achieve. That visibility can translate into higher tourism demand, strong destination branding, increased merchandise sales, and new commercial partnerships. Experts say heritage has become more than a cultural asset. It is an economic one. When combined with the global reach of sport, history can become a powerful marketing tool that creates long-term value beyond the final whistle. For Egypt, with one of the world's richest civilizations, major sporting events present an opportunity to showcase pharaonic heritage to millions of viewers worldwide, reinforcing the country's image and supporting tourism, creative industries, and cultural exports. As the World Cup continues to capture global attention, it is proving that countries are competing for more than victories on the pitch. They are also competing for visibility, influence, and economic opportunities, using sport to turn national identity into a global brand.
And for further analysis on this topic, we are joined from London by the CEO of QW Capital, Mr. Gianluca Lobafalo. Welcome, sir, to Q News, and hope you're enjoying the tournament.
Absolutely.
Great. Sir, let me ask you, Norway celebrated its World Cup success with Viking symbolism. How important has heritage become an economic asset during the major sporting events?
Yeah, it's clear actually this Viking row is just the last and most recent example. You may remember when after the World Cup in 2002, the modernization view of Japan and South Korea came out really strongly, or after 2022 World Cup, Morocco came and took center stage on the back of a very good, strong and robust performance of the team. So we are on New Zealand after the Rugby World Cup in late 90s. So we are seeing a huge association of a soft power influence.
Yes.
Of this sport. And that is massive, absolutely, yes.
But do you think the global sporting events are now among the most powerful platforms for nation branding?
In a social network era where we are, any new platform can play a bigger role. So why not sport event to basically manage to have such a focus and a following? Why not using that? That makes a lot of sense. It should be. It's always been the case. It will be even more now.
Do you think in cultural celebrations during sporting events translate into measurable tourism revenues?
I mean, measurable is a strong statement, I would say, but definitely look at what, for example, as you mentioned in the introduction, the case of Egypt. I mean, Egypt is having a surprising strong performance.
Yeah.
It is the center of civilization. I'm from Italy, and so we always grew up that everything we have in Rome came from Greek and Egyptian heritage. So the fact that it's going to be taking center stage, all the Mediterranean, if you like, basin, is actually a good thing. Absolutely, yes.
Countries maybe such as New Zealand have the haka, Japan highlights samurai culture, and Norway embraces its Viking heritage. What makes these identities economically successful?
It's an attraction. Like everybody's attracted by Japan tradition of samurai, of that Israeli. If you go and say, I mean, if everybody company who used to produce samurai sword, and now they produce knife for the sushi chef. This is a way to show there is a continuity in the tradition. It manifests through different way. The Viking is a strong association with Norway. Don't forget that are supposed to be the first one who actually touch U.S. shore even before Colombo. So it's interesting to see this coming back and giving relevance to a country. So it's a very smart thing, absolutely.
Okay, let me go and move to Egypt in particular, where Egypt possesses one of the world's richest civilizations. Are we fully leveraging, do you think, our pharaonic heritage to strengthen our international brand during major sporting events?
I believe, particularly for very remote area that they not necessarily are aware of the relevance Egypt has for thousands of years. If you say to a Mediterranean citizen, we all know the relevance Egypt has. So doesn't this really push a person like me, who, by the way, I've been already to Egypt, considered one of the most incredible countries I ever visited.
Thank you.
It won't really influence my opinion and view on Egypt. But I think a Far East person who has a grab of what the relevance was for Egypt, they don't necessarily know before this World Cup. So actually what is increasing the reach of this heritage to being well known on a world stage. I mean, this is billions of people watching a football match. What could be a better stage with a good attitude? You know, you're watching during football. You don't feel you are you are under a marketing campaign. So it's a very smart and subtle way to put a country heritage at the center stage, associated with a good feeling, provided they have a good performance on the sport we're talking about, is a very smart way and actually cheap, because you are not building an ad hoc campaign. You are benefiting out of that.
Beyond tourism, what do you think, what industries benefit when countries successfully market their heritage?
Mostly export, I would say, if it's an exporting country. But the first thing, honestly, if we go back to one of the words you used before, measurability of the impact, I would definitely say is tourism. Then if we want to say the impact will be on anything else, on export, eventually a better position to negotiate conditions for imports, yes, but that would be extremely more difficult to measure, the direct impact. The direct impact is Hello, can you hear me?
Now I can hear you.
Okay. Yeah, I would say that in terms of measurability, is mostly tourism.
Sir, how important, can you tell us maybe, is the cultural identity in attracting investment and strengthening a country's global image?
I mean, it's obviously that the tourism is not just the people visiting, but will be as well. If you start to realize that a country, which is a small country, is managed to build a team, it means they have a very good management skill. Because a management of a football league, let's talk about football, is not different from a management of a company. So good management is associated with good performance. Let me give you the opposite example. I'm Italian. Our team hasn't qualified for the third World Cup in a row. And this is not because of lack of player. Italy qualified as being the world European champion under 17, the vice champion of under 19 in Europe. Why they don't produce at the moment a good senior national team? Is lack of management. It's pure management of the Italian Football League. Look at tennis. Italy is producing a lot of champions in tennis because it's better managed. So if a country like Egypt or Cape Verde manage to show that they can manage a good, successfully a league and produce a good team, it would incentivize and invest to say, in this country, they know how to do things. So yes, absolutely.
Yeah. And as competition for global attention intensifies, could you think cultural heritage become one of the most valuable assets in a country's economic strategy?
I think it's always been the case. We just didn't realize. We are just now extrapolate, and this is taking more center stage because we are in a communication age, is in a social network age. So it would take much easier center stage. But what you say is always been true and will always be true.
Sir, if you were advising countries, what would be the strategy for transforming our heritage into a stronger global economic brand through sports?
Passing messages, as I said, of proper, serious management. So the things are done seriously and properly in a country. That's what people, I mean, obviously the national heritage, then the national beauty are a plus. But that is basically for tourism. But when you're talking about an image of a country, what you really are looking after as an investor, let's make an example, is the reliability. Is seeing that people do things properly. That's his key. And actually a football and a performance that is robust, not due to a specific player or a specific superstar, but you can tell that there is a philosophy behind, there is a proper management structure behind the team. That's tell an investor, this is a country you can rely on for your next investment. Yeah. So why not?
How has the commercialization of culture changed the way countries approach international sporting events?
It's changed completely. I mean, we're not talking about the marginal change. This has been a revolution, but it's been a slow revolution. So even though it's accelerating now, as we said, we make an example from at least World Cup 2002, where we are, or even I can remember the European Cup in Portugal, where everybody was saying in 2012, or actually it was even before, we discovered that was when they won, but it was in 2000, I think 2004, it was the European Cup in Portugal. Everybody attention, drag much more worldwide attention on different fields.
Yeah. Do you think hosting or excelling at major sporting events have a lasting impact on the foreign direct investment, or is the effect usually just temporary?
It's a double-edged sword. So, for example, if you look at the Olympics, let's think about London 2012 Olympics or Rio de Janeiro 2014. Yes, there's been a major impact. It's true that not necessarily all the company who invested in that saw a positive return, but look at the dramatic change both London and Rio de Janeiro had in terms of, for example, cycling by lane. Everybody, most of the city moves now on bike. That was thanks to the positive impact of cycling and biking sports and the infrastructure that's been allowing now much better move in the city. So we are seeing physical impact, a lasting, everlasting impact. Yes.
And what role does digital media, if you can tell us, play in amplifying a country's cultural identity during the global tournaments?
As you said correctly, is an amplifier. And this is a good amplifier. And we always criticize the digital economy, digital age for all the negative impact on capacity of concentration of people. All is true, all is going well, I agree. But in terms of this specific role on let a country be known worldwide, of being taken center stage for their heritage, for their culture, definitely the digitalization is definitely a plus.
Mr. Labofalo, tell me, how can governments ensure that cultural promotion feels authentic rather than just becoming a marketing campaign with little substance?
Yeah, again, this has to do with the follow-up. So it's easy to pass a message, for example, reliability, through a 3 weeks World Cup. Don't forget the World Cup or a sport event like this is 2-3 weeks maximum. The question is the follow-up.
Sir, do you think the younger global audiences respond differently to heritage-based branding as opposed to previous generations?
Of course, every generation has a cultural, pass me the term, heritage, and they have a different reaction function to these messages. Clearly now, because of this attention span that the new generation have, you have to pass a much faster message. Even, for example, think about football. People are criticized that football matches are maybe too long for this new generation. So it has to be passed away to try to be making more effective, more exciting, and a much more shorter span. Yeah. So yes, it has a different way they are perceived, the stimulus are perceived, incorporated.
Can you tell us, how can countries measure the return on investment from cultural branding initiatives linked to sports?
I mean, again, when we talk about measurability, I would only believe could be sport. I mean, yes, you can claim export increase, but that is very dependent on what kind of export this country, specific country, has its strength.
Sir, are you there? Can you hear me?
Yeah, I can hear you. Yes.
Yeah. Okay. Now I can hear you.
No, so what we're saying is, I would say only on measurability is only on, we said before, on tourism. On the export, yes, you can claim there is a link, but that as well as to do with the demand of the kind of product. So it's more complicated than that.
Well, from London, that was CEO of QW Capital, Mr. Gianluca Lobefalo. Thank you so much, sir, for your insights. And that brings us to the end of our economic bulletin for today. Thank you for watching, and stay tuned to Q News for the latest updates from the worlds of business, finance, and global affairs. And don't forget to follow our coverage during the World Cup, where we will go beyond the action on the pitch to explore the business of the tournament, from sponsorships and investments to tourism, trade, and the economic impact of the world's biggest sporting event. And I'm Salma El Fiki. Thank you for joining us, and have a great evening.